Hi, I'm Cody from Wall Street Breakdown. It is Wednesday, the 18th of October, 2017. We've got earnings going on. I know you like earnings. You want to know what's going on with all these companies. How are they going to fit into my portfolio? Well, let's take a look at an earnings recap from today. Much like yesterday's earnings recap, we are going to give you the segments that these companies are in. So we're going to cover earnings today from American Express, Alcoa, US Bancorp, eBay, and Abbott Labs. So you take a look in the description, it's going to tell you exactly where you can go if you're just looking for the earnings from one company. Otherwise, stick with us. We are going to cover the earnings from all 5 of these major companies. So, starting off, American Express. Earnings per share of $1.50 beat the street by 2 cents. Revenues of $8.44 billion. Man, that's a big number. Beat the street by $150 million. That's up 8.6% in revenue year over year. Now, American Express doesn't have a whole lot of information. I mean, it's just one of those companies that does just a couple of things, and they can really project forward what's going to be taking place. So we've got some of the major points that happened in this earnings call. We've got a 5% decrease in the outstanding share count of American Express in the last year. So that's down to 881 million shares outstanding. Expenses in American Express have gone up 6%. That's due to higher rewards cost, American Express is saying. And we're also expecting, I mean, it started to happen already, and we're going to expect this. I mean, as the economy eventually plateaus, you're going to find a lot of people that are a little overextended. There's been so much credit out there that I would imagine American Express, they're planning for it. So is Visa and MasterCard. There's going to be a lot of delinquencies, or a lot more than what we're used to in tighter credit times. So that's going to end up happening. American Express does mention the delinquencies. It's picking up slightly, but it's not a number that's nothing drastic yet. It's not knocking down any house of cards or causing any mortgage collapses or anything like that. But there is a slight pickup in it, and we're expecting obviously more as, like I said, people overextend themselves and an economy eventually plateaus. We are definitely not expecting that, even though today's earnings calls are nowhere near the great earnings calls we had yesterday. I mean, take a look at the IBM one. I thought that was only okay, and IBM was just ripping today in the market. So Alcoa, I guess American Express closed the day at $92.08. That's up 0.49%. So, I mean, the market liked what American Express did, but it's pretty much par for the course, I think, at this point. I think American Express is really topped out of that $92 mark. I don't see it moving a whole lot right now unless there was something really tangible that took place. It was a decent enough earnings call. We expect things like the delinquencies. The share count reduction is, we already knew there was these buybacks going on. So overall, fairly good earnings call from American Express. We go over to Alcoa. Alcoa's earnings per share of 72 cents missed by 5 cents. Revenues of $2.96 billion. We're in line. That's in line. That's 2 days in a row we had in line. So accountants out there doing the analytics for this, you're doing an amazing job. When you guess 2.96 billion, that's how you work numbers, my friends. That's up 27% year over year. Now, Alcoa's EBITDA is up 16% on improved aluminum sales and pricing. They've got energy stuff over in Brazil that's doing really well for them. And they've raised their forward guidance to $2.4 billion EBITDA earnings before interest, taxes, depreciation, or amortization from $2.1 billion. So that is... That's Alcoa's. I mean, nothing happened in the market today. 47.75. They closed that. I believe it's up or down 0.04%. It was, it's Alcoa. I mean, it's a company that people can predict a lot what's going on, but Alcoa is finding themselves. There's a bit of a pullback on aluminum right now in China, so there's a bit of a refining pullback. So Alcoa is going to benefit from that. I mean, overall, just really good company, does a lot of good stuff. They're constantly involved in every country that seems to be doing major renovations or major growth. Alcoa is obviously one of the major companies that are going to be involved in that, but it's predictable. You can predict it. It's not a company that's going to move. It's a very good, stable player. I personally really like Alcoa. It's an earnings call that you can expect, and it's a lot of growth. You get that revenue 27% up year over year. It's pretty good, if I can say so myself. US Bancorp reported earnings today as well. That's earnings per share of 88 cents. That was in line as well. doing a heck of a job. Revenue of 5.61 billion beat the street by 10 million. That's up 5.1% year over year. Net interest income up 8.4%. Average total loans up 3%. Average total deposits up 5.2%. And 79% of third quarter income was returned to investors in buybacks or dividends. So U.S. Bancorp is not only doing really well, they're doing phenomenal numbers wise. This is really great growth. They closed at a 53.27. That's down 1.13%, which, I mean, that's a heck of an earnings call from what is ostensibly a regional. It's a regional bank. That's a big move. It's not regional, but it's not everywhere. It's not JP Morgan, right? So we're talking about a bank on an absolute different level that's growing in every segment. I mean, they're ticking the boxes. It's a fantastic earnings call. I thought down in the market today is, intraday trading. You know how that kind of stuff goes. It could have already been way overbought. So, but it's a growth, and the growth looks fantastic. 79% of third quarter income returned to investors in buybacks or dividends. I mean, U.S. Bancorp is not only making the money, but is making their shareholders happy to be owning U.S. Bancorp. If you're thinking about doing any type of investing, before we go any further, please consult a licensed professional financial advisor. You know all the rules. You're smart. That's why we're sitting here talking about this. eBay reported earnings today. eBay's earnings per share of 48 cents, also in line. So you're making me look like a liar now, accountants. I think that in line is something that you see so rare. We saw it once last earnings season. I swear it happened once on revenue. It didn't even happen on the EPS. I'm pretty sure at all the major companies, but today it's happening. It's happening nonstop. We're just going to let it happen. You know what? Maybe this was a good guessing quarter for you guys. Earnings per share 48 cents in line. Revenue at 2.41 billion. That's up 40 million over what the estimate was, and that's up 8.6% year over year. eBay's got some good growth. Merchandising volume up 8%. 2 million active buyers. They were added to the eBay roster of buyers and sellers. That's up to 168 million in total. So eBay, it's still, there's a lot of, there's not the growth internationally that I think eBay really wants, because shipping costs are just so astronomical. If you're trying to send something somewhere, you as an individual, and not being Amazon with all the connections, the ability to ship stuff on your own, aircraft, you're going to pay an unbelievable fee to ship something or buy something from around the world. So while eBay is a great idea, it's still very, very compartmentalized to the region that you're in. Even being in Canada, it's very expensive for me to send something to the United States. It's bad enough sometimes in Canada. So it becomes something where, while eBay in concept is marvelous, and eBay, if you're looking for selection, again, marvelous. You cannot go wrong. When it comes to the growth factor of eBay, you're really still limited to a lot of people in your proximity, or you pay and they pay very, very hefty importing charges. They pay very hefty shipping charges. So while it's a good quarter for eBay, close the day at $37.97. That's up at 1.28%. I don't know. I'm not too sure. eBay hasn't really reached where eBay might actually be, and it's going to be a bit of a taper off. I don't see the growth that we've seen in years removed. I just don't see how it's going to ever come back. Personally, I don't see what they're going to do that's really going to be the tipping point to bring them back to a company that we see them growing and doing something, branching out from where they're at. Because as of right now, shipping costs kind of own them, to be honest with you. It costs far too much for me to send something, regardless of how convenient eBay might have sellers available with a product that I want. It just costs too much overall. So, moving on, Abbott Labs, the final company, had earnings today. Abbott Labs earnings per share of 66 cents. That beat the street by 1 cent. Revenues was $6.83 billion. That beat the street by 110 million. That is up 28.9% year over year. That's outstanding revenue growth for Abbott Laboratories. Some of their segments, nutrition up 0.8%. Their medical devices were up, I believe it was 98%, diagnostics up 5.4%, and the established pharmaceuticals up 15.7%. So medical devices up 98% in and of itself is amazing, but every segment just to be up. The great earnings call in a day with what I would say, I mean, the enthusiasm's just not, it's not Johnson & Johnson and IBM and Morgan Stanley and all the companies we had yesterday. This was a lot of stuff that I thought was really predictable. US Bancorp had a really good earnings call that I thought was really good and wasn't really received really well in the marketplace. And Abbott Labs had a really good earnings call as well, but it wasn't with the marvel that yesterday was. But I think with enough people out there that have diversified portfolios, this is definitely still going to be relevant to how your portfolio ends up breaking down, whether your sectors cross into these companies or you own companies because of indexes or whatever it happens to be. So we deliver the earnings. That's the way we like it. I'm Cody from Wall Street Breakdown. If you haven't already, click the subscribe button, click the notification bell, thumbs up for this video, thumbs up for all the videos, and leave us a comment. Let us know what you think. We love hearing from you, and we want you to have a marvelous day.